Well, so you solve some of the technical challenges of this crumbling old infrastructure, but there is still this legacy bureaucracy related to KYC that does exist. And I got no idea how much of a block that is. Just examples. I just signed up to based on we were looking on your website. I signed up to Zappo. I didn't realize what it's become since once they sold it, and I was like, oh, that looks interesting. Let's have a look at that. And I've signed up, and I have to provide my passport and all this information. I'm waiting to see it. Similarly, the other day, one of our sponsors wanted to pay us, and I gave my bank details. They're US based, I'm UK based, and they had trouble sending the money, and the address was wrong, or the phone number. In the end, he was just like, "Can I just send you Bitcoin?" And he did, but. We still have, I know. It was like, but we still, when you're trying to glue these systems together, is there any risk that you cannot control this network, that some people just won't allow it, or is it that they can't stop it?
So I think for us, the core target customer is one that is larger in size than the typical applications. And that's the beauty of also building on an open network. You have a number of others who are trying to cater to smaller players and different kinds of setup. We're going after large financial institution exchanges, wallets, and they have a customer base. And their customer base is already KYC, they're already onboarded. They've worked out the friction as much as possible for the vast majority of them. So if all of them come online on the network, and then other players are catering to other types of endpoints on the network and make those better as well, then you can start to send and receive value without friction on the network in a very seamless way. But the problem is today, a large majority of these players that have a lot of reach with consumers are not on Lightning.
Yeah.
And they don't enable you to send whatever currency you want on top of Lightning in real time. And so we have to fix that. And that's going to take a while, but we're very determined and patient. And so we're going to see it through.
Are you seeing any appetite from large companies who aren't native Bitcoin companies or native crypto companies?
Yeah. We're seeing a lot of traction in a number of regions from actual banks that have the ability to touch Bitcoin. We don't have that in the US right now under this current administration. If you're a bank, you can't touch Bitcoin. Some of them are doing it at very small and a very small sandboxed type of setup. But so yes, the banks themselves are a little frustrated with the correspondent banking system and SWIFT and all these things. They feel like it's inefficient, it's costly for them to operate and maintain. It has a lot of the compliance features that they're subject to built in, so you need to be able to serve them in the same way. But even the banks themselves are not very happy with the state of things.
So it feels like you, more than anyone I spoke to recently, really understands Bitcoin and its potential to a very deep level. You can see the future of what Bitcoin can do way beyond probably some of the ideas that people have. So do you feel like you're almost seeing into the matrix with this? You can fully see, and therefore, I mean, the question I'm really asking, you're like, how do all these other people not get this? How is everybody not thinking about this? Like, how are we at $28,000? Like, why is it, do you just not understand that?
Well, yeah, I do understand it. I think that the reality is we've gone through so many cycles.
Yeah.
And so there are cycles where Bitcoin was going to take over the whole world and people went crazy and needed to own Bitcoin. And then there are times where Bitcoin won't do anything for anyone. It's slow, it's expensive, it's just not the thing. The next thing is the best thing, etc. So you've had all of these cycles, and in the meantime, we really haven't fixed consumer problems at scale with any of that tech. Like, there's a lot of talk, there's a lot of speculation. There's a bunch of technology that has been built. But when you think about end consumer impact at mass market scale, it hasn't happened with Bitcoin. It hasn't happened with the entire industry. Arguably, Bitcoin is faring better in terms of its neutral digital store of value, customer proposition. but by all means, compared to all the other internet era technologies, we're not at mass market scale. And I think one of the reason is that if you're ideological about it, and that's it, like that's your whole drive is ideology. All the currencies other than Bitcoin will die. We'll all use Bitcoin as our unit of account to pay for your coffee, which is always the example everyone uses for some reason, which is probably the last thing that will happen, by the way. But anyways, so if you take the dogmatic ideological approach, then you're not going to solve the real world problems that are in the way of mass market adoption. Because you're not going to want to build interoperability with existing payment rails. You're not going to want to build compliance services that enable regulated entities to be on the network. You're not going to do all of you're not going to do all of the things and build all of the capabilities and software and services, et cetera, to enable everyone to be on the network, because you think that the very participants that we're serving shouldn't even exist, right? And so when you have ideology rather than understanding both the value of the underlying core technology for what it is, you're very clear-eyed about the gaps that you need to go address. And at the same time, you understand how the rest of the world functions and the existing payment systems, the existing incentives that are built into these payment systems and the players working to build those experiences and serving billions of customers on the other side of it. If you don't understand both of these worlds, you can't build the right thing. And so I think that's what's being problematic.
But I don't think that will be a problem for much longer, because I feel like the ideology is a phase. But I feel like over the last few years, we've got much more serious players coming in showing an interest. Whatever you think of BlackRock, they have an interest. We have Fidelity. We have David Marcus, who's coming and building products. And I feel like also in the work we do, the kind of people we're interviewing, we've got a lot of macro people coming in, philosophers coming in. It feels like the ideological stuff was more of a phase. I don't want to be rude to people, but it's like maturing out of it. But I also feel like if you are ideological, you can live on a Bitcoin standard. You can only use Bitcoin companies. You can only transact with companies that accept Bitcoin. All this other stuff can be built without damaging the core principles of Bitcoin.
Yeah, I agree.
Now, look, I can accept an argument about a BlackRock having an ETF that is centralizing parts of Bitcoin, but you can choose not to buy that.
First of all, ideology. I'm not like saying that ideology is a bad thing. I was just responding to your question about why we haven't seen this come together until now. And I think that if you're too ideological and you don't see the world as it is, you can't build for the world as it is. And so then you're like, okay, I'm going to wait for 30 years for this thing to eventually happen because it's meant to happen. And I agree that the value of ideology in terms of believing that this is truly neutral internet money, which is my ideology. I actually really believe that there will not be another form of neutral global internet money that comes close to Bitcoin ever. So that's my ideology. And then it's like, okay, what's the technology capable of doing? What do we need to build? But for BlackRock to come in and issue a spot Bitcoin ETF, you shouldn't be opposed to that. It's going to enable millions more people to own Bitcoin, care about Bitcoin, and it's going to strengthen the value of the network. If more people care about it, if more people own it, then the network is much stronger, much more resilient.
Do they actually own it, though? I think that's a fair question. Do they actually own it?
But would they care about it? They would own a piece of it. They'll care about the value. They'll look at the price every day. Would they care about it? They would.
I would push back on that. You were going to.
Yeah, I would definitely push back on that, because I think they have exposure, and sure, hopefully, like they then decide to learn about Bitcoin. But I think there's a very big difference between what BlackRock and a spot ETF does compared to what your business is doing. Like you're actually building on Bitcoin, and that's like a rising tide lift all boat, right? And like you're adding to the network and like enabling this kind of like freedom money, internet money to proliferate to more people. BlackRock are not doing that.
And just to add to that, I also think BlackRock might create martyrs in that BlackRock doing this can expand the reach of Bitcoin, awareness, understanding, but at the same time create a bunch of Bitcoiners who have an IOU who may end up becoming martyrs if something happens to the Bitcoin that they custody or something happens to BlackRock themselves, which I think is low risk, but not zero.
Yeah, I think, look, I mean, they're custodying trillions of dollars of assets, so I think they'll be fine. But
it depends if they try and play like the fiat games with Bitcoin, because we've seen what happens when people do that.
yeah, I think, so for me, here's my ideology. I think my ideology on this is Bitcoin is an open network. People have the choice, and this is the value. The choice is the value. It's, you can decide to have a hardware wallet buried in your backyard if that's your thing. You can decide to use Coinbase because you're fine with an exchange custodying your value. You can do a self-custodial wallet on your phone, or you can own Bitcoin indirectly via an ETF whenever that becomes approved. And that's the beauty of an open network. People can choose, and by the way, they can get on to the network indirectly at first, learn about it, and then decide they want to own it directly. But is it a good thing for Bitcoin that very large financial institutions that have a tremendous amount of reach with consumers start talking about it, promoting the product? People will learn about it, will onboard onto the network indirectly. Some of them will end up owning Bitcoin directly because they've been onboarded indirectly at first. And arguably, I mean, the same argument was made many, many times for centralized exchanges, which is like, no, this is like, what are you doing? Like, you're custodying people's coins. This is like, not the way it was meant to be done, and people need to self-custody, etc. But do we think that more people are now using digital assets in general and Bitcoin because Coinbase did what they did in building a really good consumer experience and marketed to people so they could actually onboard? Absolutely, definitely. Undeniably. Mm-hmm. So they advanced the market. And I think the same argument will apply to ETFs, although it's 1 degree further removed. I get that point. But I think educating people more and more about the network, having more people caring, more people owning, will strengthen the network. And I think that's value.
And I think it's inevitable more than anything. Like, well, we're obviously, no one's going to stop this now. But the one thing that it does do is if you buy the BlackRock ETF or whichever ETF gets approved, you're getting exposure to Bitcoin, and then having to, if you ever do want to come into like the real Bitcoin world, you have to sell that Bitcoin, pay tax, and then try and like, so it's not a direct comparison to Coinbase, I would say, but I do understand the analogy.
No, I completely agree.
Yeah.
Do you have to sell the ETF? I thought you can.
You have to be a qualified custodian. So that would be like the Fidelities of the world. It won't be people.
Yeah, okay. Yeah, fair enough.
That's the BlackRock ETF. Others will be different. But
yeah.